Good evening, guys. Currently, you can see the market is around 447, and as today is Friday, let's look at what market has moved today in Nifty and Bank Nifty as well. Now, as I have posted you the live trade where I have taken in Nifty, the same trade I thought of expecting some kind of bullish movement from here, keeping our target all the way here to 1.68 level. But what we have missed out is that this fair value gap, guys. As you can see clearly, the market broke this low with this impulsive momentum towards the downside. With this here, you can see a little bit of fair value gap here. These three candles over here, but here you can see after the market formed chalk over here, and you can see this fair value gap. So what we had taken was initially, like you can see clearly, I placed chalk here, and I consider after this rejection, there are high chance the market will continue further. But what happened is that the market again came down and grabbed this liquidity over here, and again market went to our desired direction. So if you had extended your stop loss till there, you could have clearly made some kind of momentum towards the upside. But let's look at premium charts, guys. If you take out this trade as I have posted in my live trade analysis, my previous video, you can see the market clearly took support from yesterday's low, and again also the market came to yesterday's low, took support from chalk, clearly signifying bullish momentum, faced rejection at this 0.50.6 zone. This is a 5-minute range candle, guys. This is actually the 5-minute range. If you consider this 1, 2, 3, 4, 5, if you consider this 5-minute range candle, and this is the fib of the first candle, and you can see the market faced some sort of resistance, couldn't cross this, and the market again retraced back, and you can see this rounding bottom kind of pattern here, clearly signifying some sort of bullishness, and the market clearly broke this high as well, clearly signifying bullish momentum, clearly signifying this is the breakout structure towards the upside, and after this chalk. So if you consider fib levels, and if you take this out, and if you consider fib levels, the common point between this, the common point between this, and the common point between this, you can easily target the 100% level, or the 1.68 level, or the 3.68 level. You can see clearly the market came all the way to 1.68 level. You could have easily exited here, but 1.68 level. This was such a beautiful trade, guys. You can see it's kind of rejection candle, or you could have easily taken, or anywhere when the price showed some sort of momentum, you could have taken long position, keeping your stop loss just here and targeting all the way to 1.68 level. But if you see at premium charts, and if you consider a 10-10, if you look at Bank Nifty, you can see, guys, here in premium charts, you can see the this low over here, and the market clearly broke the structure high, another low, and if you might have taken long position, the market rallied all the way up. But you can see after this also the market formed lower low here, lower high, but here you can see the market came all the way to this demand, forming a lower low as well. Look at this, guys. This is a lot of premium decay. Even if the market here formed lower high, here the market formed lower low, and you can see at the same time here the market formed a rejected price over here from this 200 moving average. Here you can see clearly there is a lot of premium decay, and this upward momentum here, there wasn't much premium move, but here you can see the market came all the way to this demand, where even if the market formed higher low here, it came all the way and formed lower low here, clearly showing premium decay. Actually, in case if the market would have formed lower low, the market after rallying this way, and clearly it should form like this pattern lower low and continue further here, but it came all the way down here, clearly signifying there is a lot of premium decay and targeting all those buyers who might have entered here. Even after this bullish momentum also, there wasn't that much bullishness, and after price taking support here, the market continued further bullish momentum. And you can see here, guys, if you consider the anchor VWAP level here, the last down move, so when you place the anchor VWAP level here, you can see price clearly taking support from this level. This is the anchor VWAP level of the last swing, which found broken towards the upside. So you can see when the market retraced to this 350 level, or you can consider this swing also the last down move towards the up move, and mark out the 550 level. So you can see clearly the market here is 550. The market not exactly reached till here, but what we can see is that the market came here also. This is the 0.5, 0.68 level, But what we can see in confluence here is that this is the mid of the first candle. There's high chances the market might take support from here. You can see after this bearish candle, this bullish engulfing candle, and price sustaining above the fib of this bullish engulfing candle. You can see price after so many candles formed also after this bearish candle. So this is the price is sustaining above the fib of this bullish engulfing candle, as well as you can see the pivot support over here. Here you can see the pivot support. You can see this bullish engulfing candle over here. You could have entered long position just here, guys, keeping a stop loss just below this bullish engulfing candle. And in case if you wanna see the extent of how to try to plot the fib extension levels, you could take at 100% level or 1.68 level. See, look at this, guys. The market came all the way here. This is the 100% level. Or you could have tried all the way here. This is the 1.68 level. There are high chances tomorrow the market will gap up and this 1.68 level also will be targeted. But you could have just tried your stop loss as long as moving averages has been crossed. So if you try to plot the moving averages here, I think there is a lot of network issue, guys. Moving averages. So you can see clearly price might be taking support over here and trying to head above the 9 as well as 21 moving average. And clearly you can see here the market formed a sort of chalk over here, and so you could have extended till here as well. And you can see the market clearly trading above this 9 as well as 21 moving average here. And once it broke clearly, you could have exited this position where it market formed chalk over here. So you could have just tried somewhere midway in these zones as well. This is another beautiful trade. Look at this, guys. You got the confluence like what I was telling. This is the 550 level, guys. 550 of this upward momentum, and you can see the price not thesis fell here to 550 level. You can see there was a lot of pullbacks, retracement, and again the market reached to this 550 level. And here you can see there are confluences why the market should continue further bullish. Is one because of this 200 moving average which has been broken towards the upside, and again price trying to take support again from this 200 moving average. This is one confluence. Another is the pivot support, guys. This is second confluence. Another is the mid of this first candle. The third confluence. Fourth confluence is the market trying to take support from this anchor gap level. This is the fourth confluence. And you can see when the market broke this anchor level towards the downside, following another bullish candle towards the upside. Even breaking 200 moving average towards the upside. Fifth confluence, and after this bullish engulfing candle, after this bearish breakdown of structure, you can see you can plot the fib of this first solid Marabuza candle. You can see there was no wick also here with a small wick towards the downside. And if you try to plot the fib of this candle, the market didn't even retrace to the fib of this candle, clearly indicating bullishness. And after this bearishness, you can see clearly the market pierced this bearish candle with another bullish momentum. And if you try to plot this candle fib also, the market couldn't even retrace to this fib of mid of this even candle, clearly signifying bullishness only. You could have just tried your stop loss all the way here and targeting 100 as well as the 1.68 level, clearly signifying bullishness, guys. So I hope you are getting, there was not one confluence, guys, there was around 6 to 7 confluences for this to trade, for you to take this trade. I think I hope you are getting like what I mean. So after this break of structure, when you try to plot the anchor gap level here, you can see clearly. Or if you try to plot the last down move, you can see some kind of rejection here. Look at this, guys. Why not this? Because it's, if you try to plot the fib extension levels, you can see clearly. What we need to keep in confluence is that when the market broke towards this structure towards the downside, there was no fair value gaps, guys. You can see here the market, there isn't, but here there is a fair value gap. But here you can see the market rallied upwards again, couldn't cross this moving average and continued further. But this anchor gap level resistance is what the market had faced. And if you try to plot these moving averages, there might be high chances that the market might face rejection from here. The 9 as well as 21 moving averages continue further towards the downside. You can see clearly, even after this bullish momentum, upward momentum, where the price couldn't cross this orange color line. This orange color line is the 50 moving average as well as the 9 as well as 21 moving average. Also, the price couldn't cross, clearly signifying bearishness. So, in case if you might have taken short position over here, so if you consider this bearish break of structure, and if you consider this, you can see, look at this, guys. This is the chalk formation over here, where the clearly market formed a chalk over here, and this chalk moved up with came down, broke the structure with a fair value gap. So there are high chances that this fair value gap might act as a resistance here. You can see sometimes when the market even breaks with a fair value gap towards the upside here also, and here you can see clearly where the market faced some sort of resistance, and this can be called as PDRA. This is quite complicated, guys. Let's make it our trade very simple for why we could have taken this trade. So this is the chalk formation over here. This PDRA is very good, guys. You can see this anchor VWAP resistance here where the price couldn't cross. Here is one confluence. Another confluence is this moving averages, guys. The distance between this also is increasing, clearly indicating bearishness and rejection of price from here. You can see how well the price here has been rejected even after this bullish piercing candle towards the upside. Here you can see this dodgy candles and this dodgy and clearly price rejecting from here and closing below the 9 moving average. So in case if you might have taken this position, you could have targeted here, or you could have targeted this swing structure, or you could have targeted here also the last down move here, or you can consider this PDRA also, this order flow also, or you can consider this order flow as well, the last down move before the up move which broke structure. This is the order flow. You can consider here also, but you could have exited your position here, guys. I think this trade here, I think it's better to exit. Or if you try to plot the fib extinction levels, the common point between this, the common point between this, and the common point between this, you can see clearly the 1.68 level, clearly signifying the exit position. And another why you need to exit is this VWAP level here. This is the day VWAP level, so you could have easily exited at the day VWAP level here. This is just for confluence, guys. And after that, you can see the market formed again chalk. Again, this is the 50 level, where the market tried to take support, where it broke towards the downside, followed by another bullish candle. And after this bullish candle, you can see price clearly taking support. After this bullish candle, you can see the price didn't even cross this moving average VWAP level, as well as the fib of this candle, clearly indicating bullishness. So you could have taken long position here, keeping your stop loss just below this bullish engulfing candle. And if you try to plot the fib extinction levels, the common point, but this is the swing high and this swing low. So you could have targeted the 2.68 level, or the 3.68, or the 1.68 level as well. You could even have targeted this position also, or you could have just tried your stop losses, as the overall sentiment of Nifty and as well as Bank Nifty is bullish, because here you can see as market capped down, there were high chances the market would continue further selling towards the downside. But here you can see clearly the market took support from yesterday's close, yesterday's low, and rallied upwards, breaking these pivot levels, this 200 moving average towards the upside, this VWAP level towards the upside, the mid of the first candle towards the upside, the 5-minute zone of 5-minute zone 5-minute zone towards the upside, clearly indicating this momentum from bearish to bullish, guys. So the high chance that the market would continue again further. You could have just tried your stop losses, or you could have exited this position. This is let's look for here the swing high also. The high chance the market again would gap up tomorrow, or the high chance the market would continue for the bullish momentum, guys. So in case of short position, you could have taken shorts here, keeping your position over here and targeting all the way here. You can see 1, 2, 3, 4 beautiful trade setups, guys, today in Bank Nifty. Coming to Nifty, if you look at Nifty charts, and coming to Nifty, you can see clearly, as I have posted you live trade of Nifty what I have taken, and this is the pivot levels, and the market almost flat opened, but you can see what we would have expected is the market would have taken support from here and continue further towards the upside. But as the market sentiment for Nifty is very bullish, you can see clearly the market was trading above the mid of the first candle itself, or the 5-minute zone. You can see clearly the market rallied upwards, broke the structure. As I have posted you the live video of this trade, guys, you can go and watch my channel. This is the break of structure towards the upside, and the market again retraced back, broke this towards the downside. And as I told you, when it breaks the VWAP towards the downside, you should wait for retracement if it's facing some sort of rejection from this VWAP. But here you can see the market, after breaking, took support from the mid of this first candle or the 5-minute zone and formed a bullish engulfing pattern. And after forming this bullish engulfing pattern, you can see the market took support, faced some sort of rejection from this anchor wave up level, and after this dodgy candle you can clearly see that the downward momentum has exhausted, and there are very high chance the market would continue further bullishness. And I have posted this video live also taking and exiting my position exactly at 1.68 level, guys. If you want to watch, you can see, go watch my my video over there. And the last down move which broke towards the upside, you can consider this to be an order block. So this is the order block, guys. You can see clearly the market again came, took support from this order block. This is the 1 minute order block, and you can see clearly the price rejecting from here because there was fair value gap here, guys. You can see clearly this is the fair value gap. So the market, there was as the market rallied upwards with there are a lot of pending orders over here, the market has to come fill up these orders. And again, you can see clearly the market broke this way up towards the downside, followed by this rejection candle towards the upside, and the engulfing pattern of the previous two candles also, the body of these two candles engulfing, clearly indicating market sentiment from bearish to bullish. And you could have even entered long position after seeing this, keeping your stop loss just below this wick and targeting this high structure as well. Or in case if you want to draw the fib extinction levels for this order block, you can consider this structure, the common point between this, the common point between this and the common point between this. You can see clearly the market went to the 100% level. You could have exited your position here, or the market went to 1.68 level. So the fib extinction levels, though it's not clearly clear sentiment, you can see you could have exited anywhere between this also, guys. Or in case if you want to use moving averages, you can see in confluence with moving averages, and this market broke the structure towards the downside. You can see it broke both 9 as well as 21 moving average and closed below this, and further dodgy candle. You could have exited here also. You can see price clearly trying to take support here, price trying to take support here. Here also it broke, but suddenly the market rallied upwards as there was liquidity over here. Or you could have exited your position here, guys. That's it. What's more, like if you could have kept your stop loss just below this zone and targeted this level. This level, I think it's done, guys. What more than this you need? And if you consider this break of structure towards the upside, you can see the market took support at 0.38 level from the low to the high of this candle, and again the market rallied up. So if you try to plot the fib levels, the common point between this and the common point between this, you can see clearly that you could have exited here the 100% move. Or in case if that comes in sync with this fib extinction levels, you could have exited here. Okay. You can see clearly, guys, as the price is trying to trade above the 9 as well as 21 moving average, you could have exited anywhere between here. This is a 100% move. Or you could have targeted this high, or you could have even targeted this swing structure also. So anywhere between this high also you could have targeted, or you could have just tried as long as you are comfortable also by trialing your stop losses. And again here you can see the market again formed chalk here, and here the market retraced back towards the downside. Again you can see after this bearish candle the market engulfed this but couldn't cross the high of this candle. After this bullish momentum followed by another bearish reversal candle, clearly indicating bearishness. You can see clearly you could have taken short position here after this engulfing candle of the previous and targeting this low, or you could have targeted this low. So, or else if you might have plotted the fib extension levels, the common point between this, you could have targeted the 1.68 level, or you could have targeted all the way here as well. Or you could have targeted as long as it crosses the 9 as well as 21 moving average. You can see clearly the 9 and 21 moving average here as the price was trading below the 9 as well as 21 moving average. And here you can see price took support from here, and after here the market showed some kind of momentum towards the upside with this bullish engulfing pattern. So if you try to plot the fib of this bullish engulfing pattern candle, you can see clearly that the market took support here, rallied upward, but it didn't form a chop. So again market grabbed this liquidity, but this didn't close here, and after this bullish candle again the market rallied and formed chop. And you can see after here where the market clearly closed above this zone, and here after this candle And you can see another engulfing candle over here. This is where you could have taken with a very good confluence a long position, keeping your stop loss just below this peak, below this 200 moving average, and targeting all the way to this high. This is another trade where you could have taken in Nifty. Look at this, guys. You can see clearly there is some kind of bullishness over here where the price took support, and this rejection you can see, and after that the market is again trying to head bullish, and again here you can see price taking support from this 200 moving average over here. After this bearish candle, following this support, market formed another bullish engulfing pattern over here. So you could have taken somewhere between the mid of this candle or the close of this candle, and you could have targeted towards the upside, towards this swing high, or you could have targeted this swing high as well. So for in Nifty, you could have taken positions. Here also there is an order block over here. You can see that the market couldn't even cross this level. You can see the large down move towards the up move. This is the 1 minute order block where it broke structure towards the upside. You can consider this swing and this consolidation and price breaking the structure. Price again coming in confluence here along with 0.38 level of this swing. And you can see when price rallied towards this order block, you can see the market didn't come and fall directly into that order block, where you can see the market rallied down. Again up, again it came all the way near to this order block, again rallied up and finally touching the order block. As soon as the market reached this order block, you can see this bullish engulfing pattern candle, guys. You can see. So if you take this out, you can see this bullish engulfing pattern over here. This is the pattern after touching this 1 minute order block, which broke this structure high. After this consolidation, you can see, and you could have targeted if you consider this swing also. So in case if you can consider this swing, the compound between this, you could have exited here at 1.68 level or anywhere between this zone, or you could have just tried your stop losses. This is about Nifty, guys. You can see clearly the market trading above the pivot levels, the fib of the first candle. You can see I have posted you the live trade as I targeted till 1.68 level. The market clearly came here till the 1.68 level, and after this you can see clearly the price rejecting over here. And in case if you have entered long position here, keeping your stop loss here, so you could have targeted all the way between these highs, or you could have just tried double to this also. So in case if you see the compound between this, you could have targeted this 100% only. Yeah, this is where you could have easily targeted 1, 2, 3, 4, 5 beautiful trade setups where you could have taken positions. This support over here, this support over here, and here also you can find some sort of support if you try to put the anchor way up levels here. If I place my anchor way up level, you can see clearly the price trying to take support from here, where it actually took support here as well. See, look at this, guys. And here also again the market clearly broke towards the upside, and this retracement where price is trying to take support, you could have again entered long position here also, keeping your stop loss just below this peak and continuing further higher towards next few days. Coming to tomorrow's prediction, guys, what market would behave tomorrow. So as of now, let's see like what if you consider the pivot levels tomorrow, how market would react for tomorrow. You can clearly see that tomorrow is a white pivot range. This is for Monday, guys. Actually, tomorrow there are 2 days of holidays, so there is a high chance that the market will take support again here and continue further high. Or in case if the market sentiment because of budget opening on 1st of February, and there might be bullish sentiment in the market, there might be high chance that the market would gap up all the way high. Then you can expect a very good gap up if the market overall market sentiment is bullish. Or in case if the budget session where the overall market sentiment is being there, is a high chance the market might continue on downwards. But as of now, the market is very bullish only, guys. You can look for long positions from here. And this is about pivot. Or if you can't actually predict tomorrow what's gonna happen because of budget only, guys, or else I would have easily told you. There might be huge upward momentums, or there might be no momentum, or there may be huge downward momentum, so we can't actually predict how the market's gonna behave. But if you are holding on to calls, it's better to hold on to calls. There are high chance the market would further continue towards the upper. And this is about Nifty and Bank Nifty, guys. I hope you understand what I mean. And in case if you want to look at premium charts, let's look at premium charts also. So this trade, as I already told you, in Bank Nifty, as you can see, the market here formed this retracement formed a lower low here, clearly indicating premium decay. As you can see here, this whole three structures over here formed lower low, and the market rallied all the way from here. And from here is where the market rallied, and all these other things where there are price action was clearly followed, guys. There is nothing that after this the price action though was clearly carried out. And in case if you want to see this trade at around 11:32, you can see clearly the market at 11:32. You can see clearly here where the market rallied upwards, took support from this common demand zone over here and tried to rally it upward. And here you can see the price faced some sort of rejection from 9 as well as 21 moving average and continued further lower. So if you look at put premiums, you can see where here you can see clearly this downward momentum. You can see this downward momentum. There was some kind of trendline liquidity over here, and you can see here the bearishness, the price is trying to lose its momentum, but here you can see clearly this upward pulse where price is trying to gain some kind of momentum. You could have entered long position here before the main anticipatory fall, or you could have entered long position targeting this 200 moving average or this VWAP level. This is how you can easily target whenever you take long position or short position, guys. In case if you're taking long position in put sides, always see that there is some sort of momentum here in RSI, and it should trade the RSI momentum should be trading above the 50% level. Here you can see clearly as the market went here, traded above the 50% level, and after this retracement the market also rallied upwards. With this momentum here also the market rallied upwards, and you can see this is just a pullback, guys, where you can see the momentum after this initial downward, and the market is trying to take the support from the 50 of the RSI, 50% of the RSI, and here you can see the market forming some bullish engulfing pattern. You could have taken long position just here, or in case of my study, you could have easily taken here targeting all the way to 200 moving average or the VWAP levels. This is what we need to understand, guys. You can see clearly where the market here rallied towards the downside, but here the market went up and took faced some sort of rejection. And here after this downfall, you can see the market retraced back, but here it couldn't cross this VWAP level and continued further selling towards the downside. But here you can see there was a momentum towards the upside. This kind of bullish momentum, you can see here the premiums, the momentum in RSI also there was upside, and price trying to take support from here and continue further high. But here you can see as market all exhausted towards the upside, there was a huge premium decay here, and here it couldn't even cross the smooth moving average RSI over here, and here it faced some sort of resistance, the VWAP resistance, clearly indicating bearishness and further continuation towards the downside, guys. This is the confluence in RSI and moving average as well as VWAP, which play in synchrony with each other for you to take better trades, guys. You can see here RSI also there is a good momentum priced on retracement, price trying to take support from this smooth moving average and further continuing towards the upside. You can see you could have entered long positions over here, or if you might have looked at spot charts, I told you this bullish engulfing candle as well as 200 moving average support line over here, or the VWAP support line over here, keeping your stop loss just below this VWAP support line. You could have easily taken long positions, guys. This is the confluence, and I hope my Bank Nifty analysis with the premium charts, I hope you understand how you need to trade for better confluences by looking at premium charts as well. So, and in case if you are looking for Nifty, you can see clearly as I have already told you about this trade where you could have taken long position here. I have posted a live video of the first trade where you could have easily taken, and after this you can see here the market taking support from this 200 moving average and continued further towards the upside. And here you can see this 200 moving average where the market here also took support here, and after this bearish breakdown. And as I have told you guys, when the market gaps up and market is trying to trade above this R1 level, there is high chance that this R1 level will act as a support. Every time this will work, guys. You see here the price rejecting from R1 level, here also the price rejecting, here the market almost came to R1 level, but here it faced some kind of support from here. This is the pivot, this is S1 level, where the market clearly sentiment is bullish and the price is trading above the R1 level. You can see here in spot chart also, you can see the price is trading and took support from the R1 level and continued further bullishness. And here it took support from this 100 moving average, where here it took support from this 200 moving average in this zone, where you can see clearly here it took support from the 0.38 from this swing level at around 1136. So if you look at 1136, you can see clearly it's here only, guys. So you could have entered long position, keeping your stop loss just below the R1 level or the 200 moving average itself, guys, and continue further towards the upside. As long as the market is moving above the 9 as well as 21 moving average, you could have tried your stop loss all the way up here. And you can see clearly the market also came down, and and here you can see here the market clearly found a chalk over here, and this clear the market broke the structure. This is called chalk. So after this chalk formation, you could have drawn the fib extension, fib levels, the counterpart between this, and you can see the market rallied upwards to the fib 50 level over here, and the market faced some sort of rejection with this bearish engulfing candle. After this bullish piercing candle towards the upside, you can see this is a bullish piercing candle towards the upside, and after fib levels, you can see clearly the market even broke towards the downside. So it was a very good setup, guys, for you to take short position after this, and as well as the anchor way up resistance, you could have kept your stop loss just above here. And in premiums at around, if you might have taken this trade at around 146, so inputs you can see clearly at 146. This is the trade, guys. Here you can see, here you could have seen that clearly market broke this liquidity and you can see some kind of momentum, but here you can see clearly the market is trading below the smooth moving average, clearly indicating the bearish side of bearishness, and there is no momentum towards the upside. But here you can see clearly from here itself the market is trying to gain some sort of momentum towards the upside, and you can see at this level where the market clearly broke above the 50 level of the RSI and continued this retracement, where this retracement here it didn't form a lower low, but here the RSI clearly went down, clearly signifying that this is just a support zone, guys, here, and there are high chances that the market will continue further. So you could have entered long position targeting the 200 moving average or the VWAP levels. You can see clearly the market went from 230 all the way to 260. So and targeting after this the market faced some sort of rejection, and after this you can see input side market couldn't further continue, and you can see some bearishness over here, and you can see market after trying to take support from this 100 moving average again rallied up, but again it continued further selling towards the downside, and this RSI momentum also is gone. But here you can see clearly this impulsive momentum towards the upside, where there was a good momentum, and further towards this retracement the price trying to take support from the smooth moving average over here and continuing further. So you could have entered long position here, keeping your stop loss just below the low of this and continue towards the upside. A high chance the market would continue further bullishness, so you could have just hold it on or kept your stop loss here and expected the market to go further high for the next upcoming sessions. And this is about Nifty, guys, and Bank Nifty. I hope my trading knowledge here is helpful for you. I need you to dig into my trades of how I take and develop your own style of trading. You can take some insights from my trade, and it's better to have your own trading plan, and based on your risk to reward ratio, take your trades and maintain that discipline, guys, and hopefully one day even you will become a profitable trader. Thank you, guys.